Hello and welcome to this Energy Frontiers, and we say thank you to the African Energy Chamber for the support of the show. I am Justina Okechukwu. Now let's get started with some of the biggest energy news from here on in Africa and around the world. The Organization of the Petroleum Exporting Countries has dismissed claims by the International Energy Agency asserting that fossil fuel demand would peak before 2030. According to OPEC, it is an extremely risky and impractical narrative to dismiss fossil fuels or suggest that they are at the beginning of their end, because such narratives, according to OPEC Chief General Haytham Al-Ghais, only sets the global energy system up to fail spectacularly. The Ugandan government has launched an ambitious energy policy which seeks to increase access to electricity and attract private sector investment in the areas of generation, transmission, distribution, and exports or imports. The policy is expected to require an estimated 930.881 trillion Ugandan shillings to implement over a 17-year period. Now, Africa-focused independent Tullow Oil has trimmed its production guidance to a range of 58,000 to 60,000 barrels per day, from 58,000 to 64,000. Tullow Oil says it's looking to generate $800 million of free cash flow in the next 2 years to help reduce debt. The Angola 2023 Oil and Gas Conference and Exhibition held this week featured valuable insights from major oil and gas companies, policymakers, and engaging panel discussions on decarbonization strategies and the mobilization of capital for infrastructure development in the Southern African country. Now, global research and consultancy group Wood Mackenzie have warned that the world is heading for a 2.5 degrees Celsius of global warming if immediate action is not taken to limit the average temperature increase to below 1.5 degrees Celsius. In its latest energy transition outlook, the firm states that oil and gas still has a role to play as part of a managed transition, but there will be a natural depletion as low and zero carbon options develop. And that was a snapshot of your energy news headlines. When we return, we get an analyst perspective of the global oil market's performance in the week just ended. This is Energy Frontiers. Now, oil prices rallied to a 10-month high this week as expectations of tight crude supply gained momentum. On Friday, the U.S. West Texas Intermediate crude finished the session up 0.6% at $90.74, while Brent crude was stronger by 0.5% to $94.16 per barrel. The surge in crude futures contracts came amid forecast by the International Energy Agency saying that Russia's and Saudi Arabia's decision to extend production cuts will result in a significant market deficit in the fourth quarter. Meanwhile, OPEC on Tuesday maintained its forecast for robust growth in global oil demand in 2023 and 2024 and a supply shortfall of more than 3 million barrels a day for the next quarter if production cuts remain. Julian Mathonia, oil markets economist at Energy Intelligence, spoke to me about this and more. Now, Julian, as at the time of this conversation, Brent crude futures were trading around $92 a barrel, while the U.S. West Texas Intermediate crude was at $89, around $88.89. What do you make of this current rally in the global oil prices?
I think expectation that this market was pointing to structural tightness, they temporarily dissipated and they are now back again in every people's mind. All balances look tighter in the second half of 2023. And this is thanks in large part to the extra Saudi cuts of 1 million barrels per day. Looking into 2024, we think that the first half of the year would have seen inventories build without an extension of the Saudi voluntary cut. So remember the first quarter of this year when stockpiles grew massively. This is exactly what OPEC and especially Saudi Arabia wants to avoid. And by the way, the prospect of, a buildup in early 2024 was probably the reason why Brent was reluctant to push through $90 per barrel. Now this hurdle is lifted. OPEC has more capacity, of course. Will they use it? We don't know. So it contributes to push the price a bit higher.
Now, do you see any optimistic side about the OPEC's 2024 forecast upside to 104.3 million barrels per day?
To be honest with you, I'm a little dismissive about OPEC forecast rather than optimistic about it. OPEC sees a large deficit of more than 3 million barrels per day in the fourth quarter, as you mentioned. These numbers will probably cause some to question, OPEC's claim that their main objective is to balance this market, is to stabilize this market, when their own numbers clearly do not show this. But if you let me share 3 random thoughts. 1, production from Russia, Iran, and even Venezuela has edged higher this year. And Iranian supply might rise again pending the continued benign neglect of the US. That's one thing. 2, China will, proactively will be the balancing point. Basically, China doesn't like price in excess of $85 per barrel. And they will proactively use their oil inventories to create a demand vacuum around OPEC and pressure global oil prices down. So that's the second thing. And third, central banks, and especially the US Federal Reserve, can still destroy demand by raising interest rates faster than OPEC can destroy supply. So, you've got a tug of war between OPEC and the central banks. And basically, those central banks can hike their rates fast enough to fend off the OPEC supply curbs. Making money more expensive can ultimately force producers to discount their prices at some point if demand is being lost too fast. If prices continue to go up and they lose their revenue, then maybe at some point they will have to discuss. That's the optimistic view at least.
So what stands out for you from the forecast update by the International Energy Agency and the Energy Information Administration?
Well, what stands out from the 2 forecasts, so, the IEA and the EIA, is that both think that the extra, Saudi cuts and Russian cuts, so that's 1 million from the Saudi and 300,000 barrels from Russia, they both think that it will create a supply deficit. They disagree on the final numbers, but, they think this will deplete inventories in the second half of the year, and especially in the fourth quarter of the year. 1.2 million deficit according to the IEA, and about 400,000 barrels per day deficit according to the US EIA. At Energy Intelligence, we are sort of in between at 900,000 barrels per day deficit. The other thing is that both forecasts, IEA and EIA, also highlights that signs of tightening are particularly evident already in the diesel market, in the product market. Despite record high margins, refiners are already struggling to meet the increased demand for diesel and gas oil, and even for jet fuel, especially in Europe and on the US East Coast. And the third thing, maybe last but not least, is that both forecasts see much lower oil demand growth in 2024 at around 1 million barrels per day. So that's a significant decrease from 2024, owing to a deceleration of global economic growth and a structural decline in transportation fuel. Basically, that's their forecast.
Coming up, a joint report by the International Energy Agency to assess key energy sectors of the global economy. More on this in a moment.
Hello, I'm the Executive Chair of the Africa Energy Chamber. I want to ask you to join me and thousands of other energy professionals across Africa, the Middle East, Europe, and America at the Africa Energy Week in Cape Town, South Africa. from October 16th to the 20th. This event is going to feature top-notch leaders, speakers, government leaders, industry leaders, and Africa's energy players. You are going to listen to experts and decision makers on the most pressing issues affecting our industry today. Be part of an African energy renaissance, a movement that is committed to ending energy poverty in Africa and unleashing its full potential when it comes to energy growth and energy dominance. Let us join together and learn how to harness the power of innovation, technology, collaboration to create a more sustainable and prosperous future for all Africans. You can help shape that future for Africa. Register now and get ready for an unforgettable experience. Our time is now.
Welcome back to the program. The International Energy Agency, in collaboration with the International Renewable Energy Agency and the UN Climate Change High-Level Action Champions, have together launched the Breakthrough Agenda Report 2023. The report is aimed at making clean energy technologies and sustainable solutions the most affordable and accessible, while accelerating low-carbon transitions through strengthened international cooperation. Here is IEA's Executive Director Fatih Birol and the leaders of the other 3 participating organizations speaking at the launch event of the Breakthrough Agenda reports during the week.
When we look at all this data around the world, it is impossible not to find out that the clean energy transitions are moving fast and faster than many people think. And in that context, dear colleagues, only 2 days ago, we have published some of our projections for the next years to come, for this decade. Some of you might have seen, we say that even with the current policies, even there are no additional policies are implemented to push the climate agenda, clean energy agenda, even with the existing policies, we see that the coal, oil, and natural gas consumption globally set to peak within this decade. What are the hurdles? There are many hurdles I can go through with you, but if I have to pick up one of them, it is the lack of international collaboration. Our analysis show that in the case of there is an international collaboration among the countries, reaching our climate targets would be less costly and faster than otherwise around.
We are trying to take 3 areas of action to support the breakthrough agenda, and especially that it tackles very important sectors, not just for the advanced economies, but for emerging markets and developing economies. There are 3 areas of action. One is on finance, and we touch upon some of the areas, but perhaps more focusing on partnerships with international financial institutions. And there is a great deal of work related to localization of efforts and regionalization of efforts as well, that you will be seeing highlighted more this year at COP28, based on our work on the pipeline of bankable, investable projects, and the work as well that we're doing in the host country for COP27 on the green smart activities. The other work, which is basically on research, development, technology, and capacity development to do that. I'm happy that both the agendas of the presidency on the official side and the Marrakesh Partnership agenda, which is the parallel one, have a very strong focus this year on technology, research, and development, including at the project level. The third area, which is really big, and it's a very big area of concern, which we are seeing that was not mentioned till now. It's basically about the operationalization of the high-level experts group, the work that's being conducted now in partnership between the champions, the work on the race to zero, areas related. I know it has some controversy in some jurisdictions, but I have to spell it out. It's about ESG and the environment, social and governance areas of work. And this in particular is providing the kind of incentives and guidelines for the private sector and their financiers. And we're expecting some progress, and I hope, without exaggeration, some sort of good alignment of priorities. So these are basically the three areas that you'll be seeing: finance, R&D and technology, incentives, including what's related to regulatory structure and policies.
In this report, we aim to say what that looks like. What forms of international cooperation can make low carbon transitions faster, less difficult, and lower cost? To be effective, international cooperation needs to have at least 4 characteristics. First, it needs the right focus. In each sector, it should be focused on the ways that countries can achieve more together than they can alone, like faster innovation through shared research and development, stronger signals for investment through coordinated action to create demand for new technologies, and level playing fields where they're needed to ensure that trade is not a barrier to the transition. Second, it needs the right participation. It needs enough to shift global markets. Typically, the top 10 countries in a sector account for about 3/4 of global production or consumption. But in most sectors, the leading international initiatives now still fall short of membership that covers half of the global market. Third, political commitment is needed to progress from the softer forms of cooperation, like sharing best practice, to the harder forms, like aligning standards and policies, which are more difficult but can yield greater gains in mobilizing investment and accelerating cost reduction.
And finally, the African Energy Week is coming around the corner. On the agenda for this year's high-profile summit is a spotlight on the significance of regional integration in Africa's power sector and exploring the strategic role these systems play in making energy poverty history. For more information about the event due in Cape Town, South Africa on October 16 to 20, visit the AEC website on www.aecweek.com. And that's all we have for you on the show for this week. Thank you everyone for watching. Remember to follow the program on Frontier Africa Reports website, subscribe to our YouTube, and follow us across all our social media handles as indicated on the screen. I am Justina Okechukwu. I'll see you again.